how are you? Very good evening. Happy Friendship Day and happy Raksha Bandhan to all the people. So good to see you again. So today I thought, I'll just connect with you a little early on Tuesday itself and then get into my LLC thing on Thursday. So good to see you again, and I'm so happy that you have joined us today. So as we start, I just wanted you to follow certain rules and regulations, as you all know already. Please follow these rules. And also, as I please follow these rules. So also, as I keep saying, just in Hyderabad, there are 500 plus tax professionals who are required. And November, you have the examination. So it is very good for you if you prepare and pass the examination soon. If you need any questions about our team works very hard to create education that is relevant for the industry. So, and we are doing our best. So I encourage you not to miss out this opportunity. While people are out of jobs, while the industries are suffering, you go to LinkedIn and please check for yourself how people are getting hired, especially if you are somebody from Big Four, I'm sure, or any other US MNC which is into tax accounting. I'm sure you know the value that this license brings to you. So I encourage you, please spread this good word. And there are so many people unemployed now. They ask for experience, but at least if you don't have the experience, at least you should have the expertise. And enrolled agent is somebody with expertise, right? He is the highest tax professional as per the IRS. They call it as the highest tax credential that is given by the US Department of Treasury, the Internal Revenue Service. Very easy examination, only three parts, only 3 papers are there. I mean, compared to CA and all, wherein you write like 16 papers, 20 papers right from foundation. I mean, this is like so easy for you. Now, even in IPCC, I guess, they have 8 papers now. So 8 plus 8, final again 8 papers, 16 papers. The longevity it takes. Of course, the courses are incomparable. But for somebody who comes from a very low middle class family or who wants to support their family, very soon, I think EA is something that you must certainly not miss out. I don't see any course, when you invest 1 lakh and you get a starting salary of 4 to 5 lakhs. EA is one such course. EA is one such course, and companies like Big Four and all offer even more than 5 lakhs as the starting salary, provided your communication and you have that real-time experience also. Real Okay. So today we will be doing our tax session on standard and itemized deductions on part 1, and then part 3 we will be doing on record keeping for taxpayers. So this is the topic that we will be covering on today. So hi to all the people who have tuned in. So hi Nagendra, hi Joel, hi Sham, hi Alex, Kabir, hi Yamuna, hi Deep, hi Lekaka. Good to see you all. Thank you for joining us once again, right? So please be ready. So please go to menti.com, and that we will be working on today. Okay, as I have been saying, today we will be picking up questions on part 1, individual taxation special enrollment examination. You have only 85 questions. Okay, of course you get 100 questions in the exam papers, right? 70% is the pass rate, right? You get 85 questions, only 85 questions are valid, and 15 questions are all expectations. Okay, so of the 85 questions, you can answer 70 questions right, you get through this examination, right? And with iLead, it is definitely possible, right? So let's take up the very first question quickly. Yeah. Also above 65 years old, right? Which is like 66 years old. So given this, we know that additional standard deduction is applicable when the taxpayer is blind and when he is a senior citizen, also 65 years old, right? So in this case, because he is, it doesn't talk about his marital status, it just says as single, he qualifies for 12,200, and of course, as blind, he gets another 1650, and as somebody who is a senior citizen, he gets another 1650. Okay, so 12,200 plus 1650 plus 1650. So the total standard deduction that he qualifies for in this case is 15,500. So D is the right answer, right? Very nice. So let's Okay, fine. Let's take a look at this example. Okay, now it says John was born on December 30, 1955. Careful. John was born on December 30, 1955. So for tax purposes, okay, these are the options. John doesn't qualify for the higher standard deduction. See, for somebody to qualify for higher standard deduction, he must be born, in this case, he must be born before Jan 2nd, 1955, right? In order to be treated as a senior citizen of 65 years of age. So he must be somebody who is born before Jan 2nd, 1955. But in our case, John is born on December 30th, 1955. So here he does not qualify for the higher standard deduction, right? Looks like this is the right answer. Let's take up the next option also. So he says qualifies as being 65 or older and can claim higher standard deduction. No, he is not 65 years old. Qualifies for the higher standard deduction. No, he does not qualify for higher standard deduction. Then is considered 65 or older. No, all the three options are redundant, right? They are not applicable to him. So in this case, A is the right answer. Yeah. Sorry, my mic was off. Okay, this is a very simple question, I guess. What is the standard deduction amount for married filing joint returns if both taxpayers are under age 65? Both are under age 65. Both are under age 65. Right? So 12,200 plus 12,200. So it's going to be 24,400. So I think everybody has given the right answer there. So C is the right answer. Right? So let's quickly dive into the next question. Very good. Oh, sorry. I think the mic was again off. So there's this mic I need to adjust. Okay, I'm so sorry. Fine. So we were talking about medical expenses. So medical expenses are part of itemized deductions, right? They are part of itemized deductions, and itemized deductions, you can claim the medical expenses as itemized deduction only if they are more than 7.5% of your AGI, of your adjusted gross income. Okay. So when you see here, the tips for general health improvement, okay, what comes in this medical expenses, right? Now you see it is not medical expenses or medication, it's given as tips. So tips for general health improvement, they are not medical expenses truly, they are just tips. Next, marriage counseling. Marriage counseling. I mean, yeah, maybe even if it is a psychologist who is giving some advices, still it doesn't qualify for medical treatment. Marriage counseling doesn't come there. And then prescription hearing aids and eyeglasses. Yes, this is something, that comes because eyeglasses, the word prescription itself shows that it is recommended. So prescription certainly comes. And last one, expenses incurred for cosmetics. Oh, no. Expenses incurred for cosmetics, no, it doesn't form part of medical expenses. So as most of the people have given the right answer, the right answer here is C. Prescription, hearing aids and eyeglasses. Okay, so C is the right answer. Fine. Let's take up the next question. Okay, fine. For people who are working in individual taxation, maybe you must be loving these. Like most of us, we just completed the tax season, right? July 15th was the last date. Anyways, so let's take a look at this question, okay? So which of the following itemized deductions are subject to a limit on the allowance of a special category of itemized deduction, right? Which of the following itemized deductions are subject to a limit on the allowance of special category of itemized deductions? Okay, so let's take a look at these options. So first one, it says investment interest expense. Now see, investment interest expense, we know that it is limited only to the extent of investment income. Next one, medical and dental expenses. Now medical and dental expenses, you can claim them only if they exceed 7.5% of the AGI. I think I just told you in the previous question. And then next one, the casualty and theft losses. Now see, casualty and theft losses also, you know about that $100 limit, right? And then the 10% income limit also. So all these three are subject to some limitation or the other, right? So given these things, the right answer is D. Last one, all of these choices, right? Very good. Let's take up the next Hi Sneha, hi Thakur Rajkumar saying, hi Vinaya. Thank you for joining people. Yeah, if you have any questions about EA or you still need some clarification on EA, you can type in the comment section and I'll address it for you. Okay. Fine, let's take up this question, and as I always say, you just have Maggie minutes, right? Only 2 minutes to answer each question. Fine, so let's see. Which of the following is deductible on Schedule A, Form 1040, right? Schedule A resembles or represents itemized deduction. So what forms part of itemized deduction? What is deductible as itemized deduction? Let's take a quick look, right? First one, self-employment tax. Self-employment tax. Now, we know that self-employment tax is not part of itemized deduction, right? One half of self-employment tax, it comes as an adjustment to income, right? Above the line deduction. It is not itemized deduction, okay? So that is ruled out. Next one, SALT, state and local income tax, or state and local sales tax, right? SALT, right? State and local taxes, yes, definitely. That is something which is part of itemized deduction. Now, third one, real estate tax on rental property owned. Oh, real estate tax on rental property owned. Okay, so when we are saying rental property, it goes directly into Schedule E, not Schedule A. And last one, all of these choices, no. So B, state and local income tax or state and local states tax, that is the right answer, right? Fine, let's take up the next question. Okay, now we get into part 3. Okay, part 3, I always say representation, right? I think, as we recently celebrated friendship, so a friend in need is friend indeed, right? So a client is also our friend, right? It's very common that, client can expect a notice or an inquiry. Notice does not necessarily mean that it's a lien, it's a seizure of property, or a strong censure by IRS or something like that. A notice could also be an inquiry or some clarification on something. Maybe something is missing. Sometimes what happens, the employer also might have missed filing something, or maybe some updates from the state or local to the federal might not have gone, and maybe they may send you a letter which you as client may mistake it as notice. So an enrolled agent is someone with those unlimited practice rights, unlimited representation rights, who can represent you before the Internal Revenue Service. And he is licensed to practice in all 50 states in the US, right? So doing a tax return is okay, but standing up for your client when he is in trouble, I think that's the real merit of practice, right? Fine. So okay, take up this question on representation. Okay. See, normally when you are in practice also, or if you are somebody who is working in a US tax industry domain also, it is very important that you know the timelines. So in case client missed filing his tax return, he may be worried that he may be charged with penalties or interest, and which is true, right? So you don't file the return on time, you will be subject to penalties too, right? So this kind of question is something that is very, very important. Fine, let's take a look at this question. Which of the below statements is correct regarding the time period to keep tax records by the taxpayer? Okay, so let's take a look at this question. So first one, it says 4 years if additional tax is owed. I think we clearly wrote in a table format in the class also that when additional tax is owed, right, the limit is 3 years. What is that? It's 3 years. Next, no limit. So the first option is wrong, right? So 4 years if additional tax is owed is wrong. Now you look at the question, what does it say? Which of the below statements is correct? It means out of 4, only 1 is correct, the other 3 are wrong, right? Of 4, only 1 is right and other 3 are wrong. So let's take a look at this. 4 years if additional tax is owed. That's actually 3 years. Next one. No limit if the taxpayer does not file a tax return. True. There is no limit. If he doesn't file the tax return, there is no limit. Next one. 10 years if a taxpayer files a fraudulent return. Okay. 10 years if the taxpayer files a fraudulent return. Even for fraudulent return, there is no limit as such. I mean, IRS can come to you, right, at any point of time. Next, 5 years if the taxpayer files a claim for a loss from worthless securities. Worthless securities, bad debts, right? All these, they have 7 years as the timeline. Okay, so in this case, the right answer is B. No limit if the taxpayer does not file a tax return. Okay, fine. Let's take up the next question. Okay, fine. Let's take a look at this question. Okay. So it says a taxpayer should keep all of the following records when deducting an expense. Okay. A taxpayer should keep all of the following records when deducting an expense except. Okay. Fine. Let's look at the options here. Okay. Original copy of all records. Okay, it's not necessary that you keep the original copy. It can also be digital, right? Now, given the advent of technology, you could have PDFs, right? You could have the images, right? Or even a photocopy would do. As long as you are able to prove that, you need not necessarily have the original copy because it's an expense. But evidence is definitely necessary, and that you can also provide it in the digital format. Yes, sales slips, yes. If you're a business person, the sales slips matter. Then cancelled checks, yes, you need to have those cancelled checks. and invoices, obviously it is needed. Okay, so it says a taxpayer should keep all of the following records when deducting an expense, except, it says, okay, so original copy is not mandatory. As long as you are able to prove that these are your expenses, original copy is not mandatory. Okay, so let's take up the last question of the day. Wonderful, you're amazing. Let's take up the last question of the day. Okay, the last question of the day. Amazing. The taxpayer should keep supporting documents for items shown on a return, generally until the end of the year for the year for which the return was filed. No, do you mean to say that you must trash all the documents after the close of the tax year? No. 3 years from the latest of the due date of the return or the date the return was filed. Yes, see, normally it is advisable that you keep it as long as you are there and IRS is there. We strongly recommend that you maintain your records, but the by default the statutory period is 3 years. 3 years, right? Next, 5 years from the due date of the return or the date was filed. No, it is 3 years. Next, 7 years from the due date the return. Okay, so it is 3 years. So the right answer in this case is B, 3 years. Okay, so you have to keep it for next 3 years. So that's the thing. So thank you very much. I think you were able to answer. Thank you very much for your patience. And if you have any questions on EA, right? So please get in touch with us. We are currently doing business tax classes, and you also have this now, or we have made it all itemized. I mean, in the sense that we wanted to fit in to the students' budget given the current challenges that are taking place. So we encourage you to please avail this at your convenience, and please spread the word, because the lack of resources should not be a challenge for you, right? You must be able to do it, and I feel you can do it, right? So thank you very much for joining us today. And if you still have any questions on enrolled agent examination, or which we call it a special enrollment examination, please get in touch with us, and we will be happy to clarify any questions you may have on this. Okay, so our contact details are mentioned right below, and if you have any questions, please feel free to contact us. Yeah, thank you very much for joining us today. Yeah, take care.